Hello Tezos friends, let's look at Tezos here and we'll start off looking at it versus the dollar price. As I know that we've been looking at it versus the Bitcoin price in recent days, and I just wanted to point out a little thing here, because you know if you've got this tab with the favorites on it and you can see the price differences, I just noticed that hey look, we're operating with like less than 2 or 3 cents difference in the price, so those things have ameliorated yet again, and I thought it'd be interesting. We'll start off on the dollar price since we've normally been starting on Bitcoin. Basically what we're looking at is of course a phase of consolidation after a big move, and if we have to decide whether or not this move is going to continue or if we'll go up above the sort of in the correction territory, in this case correction being the positive aspect and looking towards the $1.70 area. So if we get opens and closes above there on the 4-hour candles and above 4-hour minimum, looking down to the 4-hour, needless to say, we can have them and it not be good enough. Looking at the 12-hour, you can see that it's a bit more obvious of the need, and on the 24-hour, well, it's quite clear really. So anyway, looking for these opens and closes above there at one sort of, say for instance 170, 180, of course the line itself is at 170. And we're also looking to see then if that were to not happen, that the prices could potentially go down as far as $1. Now, of course, there's a measured move to be had off the back of this, but this takes you right past both of those points. So going for the full thing would be greedy, but it would also maybe potentially be reckless when you're looking at things like a dollar flat as well as being in and amongst here as clear profit taking zone where a lot of people would be wanting to enter the market potentially at these round numbers and things like that. But of course, if we did go down, then you're looking at a subsequent further 40-odd% push on drop in the price from just even that point down to there, another 50% off almost as you go down towards the 50-cent price area. So depending on how this were to all play out, that would be the sort of the shock and downward side scenario. Very greedy as well down here when you look towards the dollar, and towards the upside, well, again, it's very greedy target. It's $2.26 there. You can see that's almost $1 up from where we are at the minute. And as well, in terms of the percentage gains, you're looking up there at 55%. So, no need to be so greedy. Of course, we've got the 382 coming in at $2.15, and we've got the 236 itself, which would I imagine offer up a degree of resistance as well at 170 and up towards where we've been in the recent past as well, at that 190 area is where the 21 EMA is coming in at now, or 185 I should say. So anyway, I'm not a financial advisor, I know that's financial advice, but you can see over here in the HitBTC chart that the price is currently 132. We just came from, where did we just come from? Did we come from Coinbase? Did we? Anyway, the price over here is 134 and 133 there, and over on HitBTC 132. So things have, things have sort of sorted themselves out somewhat again here, and that leads to slight differences in the shapes of these candles and whatnot. So we just have a wee quick look at this here, and that's HitBTC, and then we look over here, we can see there's while the general pattern is the same, that we have a sort of different sort of shape to it. There's a lot of drop off in the price over here, as over on HitBTC it kind of stayed up here closer at this 236 Fibonacci retracement before dropping down more suddenly, and I think that was during that price point here where we've got inflection points in the market like the 236 here at this $1.55 area over here, and while this sort of where we're contemplating these things, then the markets maybe kind of contract a little bit together, and then when we move away from these inflection points and they expand back out again, which I've kind of noticed over the course here as we've been looking at the prices. So when you see these things ameliorate to a degree, you can expect that potentially the markets have contracted and they would expand again, either positively or negatively thereafter. So that's kind of interesting. We're still looking to see closes up above that $1.55 area, of course. Now it's the same story essentially, and you can check out yesterday's video for more detail as well, of course, and looking at things like divergences and whatnot. Now again as well, it's the same story with Bitcoin. Currently we're operating right in around that blue line that we've had, sort of your general sort of lower end of the of this range that we've been in, but middle or right end of the range. The lower end, of course, coming in around where the 200s exponential moving averages are, and it doesn't really matter too much what your numbers are going to be. I've got the simple set to 200 at the minute, and whereas this one, the exponential set to 233 currently, but we're operating in and around that area where there's significant sort of averages coming in around where this line is. It all sort of confluences together around about here, and so looking at that 2,450 in the lower end, and of course if we break that though, then we'd have a lower low, a lower low, a lower low here, and we'd have this downwards trend. It'd be fairly full on. Now if the prices do go down as well, it might even undo what the potential early signs of I'm always getting this of bullish divergence on the RSI, so we'll have to wait and see how that pans out. The MACD as well has got a little touch of that on the go, so we do have this bullish divergence. I'll be interested to see over the next couple of days how we respond in amongst this range here, and that's currently where I'm looking with the prices up towards 2,900 and down to 2,450 or so as the overall range, and of course your greedy eager entry point there at 2,600 or so as well, of course, and that if you were sort of managing it on the micro and scalping. But I'm not a financial advisor, and that's financial advice. And I really want to say a big thank you to all 250 subscribers, as you can see, and to say that's fantastic. It really lets me know that the content I'm putting out there is worthwhile. So thank you so much, and I will see you in the next video.